Investors and analysts say Bitcoin's lack of volatility of recent isn't a bad thing and could actually point to signs of a bottoming out in prices. Digital currencies have fallen sharply since a scorching run in 2021, which saw Bitcoin climb as high as $68,990. But for the past few months, Bitcoin's prices have bounced stubbornly around the $20,000 mark in a sign that volatility in the market has settled. Joining me from London is Ola Atose. He's the CEO and founder of KoinKoin Exchange. Ola, we're seeing some interesting things, but this stubborn stick that Bitcoin seems to have around this 20,000 range, what do you make of it? Because some are predicting that the second quarter of next year is when this crypto winter will finally come to an end. What do you think about that?
Yes, I'm inclined to agree with that, Tolu. We've seen the markets dip quite aggressively over the last year. We've seen a 70%, a drop in Bitcoin prices. And for the whole cryptocurrency market, Bitcoin is still, the biggest. It's the one, that all eyes are viewing. By all eyes, I mean, both the retail market and then obviously the institutions or the larger institutions who are interested in, invested in Bitcoin. We're all looking at the price now. Given that we're down, as I mentioned, 60, 65, 70% now, since that all-time high of about $69,000, a lot of our investors are now viewing Bitcoin as they view gold. And that's largely because there are a number of top banks, including Goldman Sachs, Merrill Lynch, and a number of other, Main Street investment banks who are invested in Bitcoin and see the current level as an opportunity to invest. The volatility that we've seen since maybe June, which was 4 months ago, where we saw a low price of 17,000, 17,500 was, the bottom. And since then, we've sort of, bounced from 17 to 25 back down to 18. And now we're just over the 20K mark. So the volatility has dropped. It's become very boring, if you like, for those who, retail trade Bitcoin, which is those who sort of, in the markets every day, looking to catch a pip here or there. But then what we're finding now is a lot of the institutions see this drop in volatility in comparison with other markets, the Dow, the S&P. They see this as an opportunity to start accumulating. And what we're seeing is a lot of, again, the larger banks are closing out their short positions. So anyone who was short Bitcoin previously, we're seeing that there's a lot less of that. No one's really short Bitcoin anymore.
Okay.
Those who are short Bitcoin have taken their profits, and we're now seeing a sort of inflow into the markets for those who are looking to go long Bitcoin. So that's really what we're seeing right now. And I think that will continue towards Christmas. And of course into the new year. So we may very well be at the end of crypto winter.
As the crypto winter.
As you mentioned.
So this point about the retail investor and now sort of like the more corporate investor, the sort of Goldman Sachs, it's a point I've been seeing a lot in some of the conversations happening. But I also want to ask, who do you think is going to eventually in the long run fully sustain the cryptocurrency ecosystem? The retail investors are the ones who took it really to that $69,000 or almost $70,000 mark. And some have said, because as you said, it's boring, retail investors are out and quote unquote smart money is in, which is the corporate investors, the Goldman Sachs. Who do you think is really going to sustain cryptocurrency in the eventual long run?
I think both parties have a part to play. I think it's really down to the psychology of those who are interested in Bitcoin. And if you look at your average retail investor, they're just looking for an opportunity to, as I say, catch a pip, which is basically, is Bitcoin going to move $200? Is it going to move $1,000? I want to get involved. I'll put a little bit of money in, and the moment it goes up $1,000, I will take my money out. So that's typically what we get with the retail space. And what you also find is, that sort of a fear of missing out. The moment we start to go green again, the retail market, retail users will be back in, and they'll also jump in and, start buying again. So that will also push the price up. But what we see with the more serious investors, the corporate investors, is they see this lack of volatility as a good thing, and it's an opportunity for them to sort of come in, with their funds and literally start buying up as much Bitcoin as they can find. And that's really what's happening. And that's ultimately going to be part of what drives the price up. So I think both, the retail space and also the corporate investors, they both have a part to play. And I think we're kind of getting to that point where there is consensus that Bitcoin has bottomed out, and we can now expect to see an increase in price. So again, that's what we see. We feel that now Bitcoin will slowly start trickling up. Again, I have to make this very clear that the Fed is still raising rates.
Yes.
I think you mentioned that just in your section before, and we have to look at what what the Fed's saying, what they put in their minutes, to really give us a view on how the markets will go over the next month or so. And the reason for that is, with this sort of aggressive tightening and rate hikes, we're seeing obviously a lot of volatility, a lot of strength going to the dollar, and that affects all assets, not just Bitcoin, stock markets, everything, even the local naira in Nigeria.
Yes.
So ultimately, we need to see what they have to say, because ultimately, what they say will drive what happens and what we see in Bitcoin's price coming into Christmas.
All right, so Ola, unfortunately, because of time, we have to leave it at that. We know the Fed is going to make a decision or announce a decision on Wednesday, so we can possibly pick up this conversation towards the end of the week to see what the reaction of the crypto markets is to all of that. Thank you so much for your time.
I look forward to it. Thank you.
All right. And it is a very interesting situation. It seems that those who are, quote unquote, the mom and pop of cryptocurrency are finding it a bit boring now. And it's the corporates that are coming in to take advantage of this time. But in the long run, as Ola has said, both the retail and the corporate investor will have a role to play in cryptocurrency's long-term success.